Since Donald Trump's election, the Dow Jones Index has risen every month. This has never happened in history, especially at the start of the new year. Therefore, a correction was long overdue, but the speed is a surprise for many people. The Dow Jones fell 1,500 points in just one day, and the DAX fell by around 10% in just 2 weeks. What does that mean for the financial markets in 2018? Over to Giles Keating, president of the Werthstein Institute in London. I remember a year ago you saw a correction coming in the markets. This reminds me of Isaac Newton, who said he could calculate the orbit of celestial bodies to the nearest centimeter, but not how far a crazy crowd drives stock prices. Giles, it should not be a surprise for you that it's down. Let's talk about the reasons.
Look, I think the main reason is interest rates rising. And we've really seen that in the United States quite strongly over the last couple of weeks, and happening at a time when valuations in the stock market had begun to get a bit too high, in my view.
But why has this correction been so violent?
Well, I think those fundamental factors were then exaggerated by a short-term technical factor. A lot of hedge funds had really become very aggressive in going short, so really gambling that volatility was going to get lower and lower. And then when it started to go the other way, then they were in trouble and they just had to sell, and that really exaggerated the daily movement.
Can fixed income really become an alternative to equities now?
I think not really over the next 6 to 12 months, because still interest rates, although they are going up, but they're not going up that much. And of course, the economy still looks as though it's got great momentum in America as well as in Europe. So I think equities probably still have the advantage, at least for really quite some time. That doesn't mean there won't be volatility, but I think they've got the advantage.
So let's come to the question of the questions. Have we just seen a correction, or is that the end of the 10-year uptrend?
No, I think this is at the moment only a correction. I mean, I could be wrong, but I think it's a correction. There may be more corrections to come, but I think that long 10-year uptrend is still in place for maybe something like another year or so.
And that means for your vote on our scale from 1 to 10?
Well, I'm going for 5, so just slightly down on where I was before, but really saying that there is still scope for this market to go up, but with a bit more continued volatility as we go forward.
Thanks to Giles. Let's continue the discussion on our webinar next Tuesday, February 13th at 6 p.m. Because in these turbulent times, it's especially important to have an experienced investment partner beside you. Because the volatility does not mean stay away from stocks, but it does mean that you should have a properly constructed portfolio. In this webinar, we'll show you how our digital asset management works, so you can start right away and build your own portfolio. And with that, over to Robert Halver to Frankfurt, long-term optimist in equities. Has anything changed in the last few days?
What do you mean, eternal optimist? In recent years it was spot on, and I still don't think you have to give up your optimism just because market corrections occur from time to time. I'm not expecting a long correction.
But was Wall Street long overdue for a correction?
Yes, and thank God we got this correction so we can see clearly again. This optimism was getting unbearable. It was becoming painful. Now we recognize again that equities do involve a risk. Their value can fluctuate. They can cause markets to become more volatile from time to time. That's an inherent characteristic of equities. But I'm still firmly convinced that the alternative form of investment, the bond market, isn't brilliant. Even if interest rates rise just a little, I make a loss on my bond portfolio, which drops in value when the price goes down. That's something I don't need. So the bond market isn't a safe haven from the equities market.
So a buying opportunity for investors?
As long as the basic ingredients are positive, global economy, rising corporate profits, I have no cause to doubt my optimism. However, let it be said that at the moment we can wait for the clamor on the equity and bond markets to die down. It's like with children in puberty. Let them scream their heads off and then talk to them again.
What does that mean for your vote?
I'm going down to a 6. I'm still positive about shares, but a consolidation phase. For now, we'll wait and see.
Fast market movements require quick estimates, which is why Valuations has not made it to the studio, so now her assessment from Paris.
Well, the recent fall in the market has probably been too brutal. It signals, however, a long overdue correction. With the Fed probably being more aggressive in the coming months, I think it is time to take some profits. So I put my vote down to 1.
What does this mean for the Werthstein Index?
Valérie Plagnol's vote is 1. Robert Halver lowers his rating from 8 to 6, and Giles Keating goes down from 6 to 5. The Werthstein Index is the average of all 3 valuations, and thus in February it stands at 4.0, a drop of 1.7 compared with January.
And now I'm pleased that Sanjiv Eluga, one of the hedge fund pioneers, is back with us. At the right time, in the right place, I would say. How do you judge what's happening on the stock markets?
Well, Stefan, nice to be back. It is a very interesting conjuncture. We've seen all the momentum of this year certainly reverse. And my experience has been really that for momentum of the kind we've seen to reverse, it takes the central banks to come in and end the party. And the hand of the Fed, the hawks at the Fed, has really strengthened. And I think, it's a warning that the stock markets can and are taking seriously.
That means the party on the stock markets is over?
Well, I mean, indeed it could. We are in a very particular time. In periods, pre-crisis periods are often characterized by moments of huge asset exuberance. We've just come out of the Bitcoin craze last year, and I do believe that, if the Fed sees that the 2% inflation target is in sight, it could accelerate tightening, and that could be the end of the party.
Whenever stocks prices plummet, the question is it a correction or the beginning of a longer downtrend? The members of the Werthstein Institute believe it's more likely to be a correction and are not turning their back on stocks. We will discuss this in detail next Tuesday in our webinar, and of course in a month's time at the next index update, by when we will have a better picture of how investors are reacting.